Consumers are still cooking up a whole bunch of recipes at home found off YouTube as the pandemic continues to rage on. And that meant another strong quarter from Ready Whip and Bird's Eye maker Conagra Brands late last week. The food giant saw sales and earnings rise 6.2% and 28.6% respectively in its most recent quarter. Let's bring in Conagra Brands President and CEO Sean Connolly from our. Sean, always good to speak with you here. This morning on the Yahoo Finance homepage, I wrote about this fear amongst analysts when it comes to big food that sales and profits are going to really decelerate later this year. What say you on that topic?
Well, I get it. There's an element of wait and see going on right now, Brian. But when you look at our business, we came in above our guidance on sales, on operating margin, on EPS, and we are ahead of track on our leverage. And I think what we're witnessing right now is the acceleration of product trial that in normal years would take years and years and hundreds of millions of dollars to achieve. And there are two reasons why we think some element of this is going to be sticky. The first reason is kind of a just pattern recognition of what we saw the last time there was a significant macro event, which was the market crash of 2008. And there we saw permanent elevated at-home eating occasions. The second is a modern current analysis of what's going on today. And what we see happening today is that really leads to believing that there will be continued elevated eating at home going forward. First of all, you're going to have fewer restaurants out there in the future. Sadly, some of them, potentially many of them, won't make it. You're also going to have some consumers that have stretched budgets, and they've come to appreciate the tremendous value proposition of eating at home. But what I find really interesting is the way these consumers have been investing in their homes, in their kitchens in particular. And our younger consumers, our millennials, many of them are learning how to cook for the first time. They're experimenting with recipes, and they're liking what they're experiencing. So when you consider the investments they're making in their homes and their kitchens, we think these younger consumers are going to want to get a return on that investment going forward, and that will lead to continued elevated at-home eating occasions, which really bodes well for the business post-pandemic.
Sean, we're almost coming up on a year anniversary when the pandemic really started to take hold in our lives, and I know you're a big product innovation guy. What are some of the biggest trends you're seeing in big food, and what are going to be some of your biggest introductions this year?
Well, one of the things that we've seen in the last year is the tremendous diversity of products that have been appealing to consumers. And really, they're at different ends of the spectrum. It started with a lot of indulgent foods like pizza and desserts. Our Duncan Hines baking mix business, as an example, has been through the roof. But then as the pandemic unfolded, people also recognized they needed to get back to healthy eating. And we've seen our plant-based businesses like Gardein, for example, which is a plant-based meat alternative. That's one of our fastest growing businesses in frozen, as is our Bird's Eye vegetable business and our Healthy Choice business. So there's a nice balance that we're seeing between, self-treat and also health and wellness. And I think that'll continue for some time. You're certainly going to see those two trends prominent in our innovation slate.
Sean, it's Miles here. I want to ask a little bit about the e-commerce business and what that means for a company like yours, where primarily consumers are coming into contact with your brands at the grocery store, and they're familiar in those aisles. What does an e-commerce strategy again kind of mean for a business like yours? Do you want to be more D2C? Kind of talk us through that.
Sure, it's a huge part of our business. It's the fastest growing piece of our business. And when people think of e-commerce, typically they think of it as that's where I buy my products. But for us, it's not just a way of getting the products to our consumers. It's also increasingly where we have to market our products. When it comes to marketing our brands, we have to meet consumers where they are. And these days, they're often on their devices or online shopping. And that means our marketing approach has had to shift heavily to online and digital. Because it's both a way to introduce your product and create awareness, but also fulfill the product. And in terms of the fulfillment piece that you asked about, we will tackle it every which way you can probably imagine. It'll be in partnership with pure-blood retailers, with traditional bricks and mortar retailers who have invested mightily to build tremendous e-commerce platforms. And we'll also experiment with direct-to-consumer ourselves. It's all going to be part of our mix in the future.
Sean, it's Julie here. I wanted to come back to Brian's point about deceleration, because you guys reported 8.1% sales growth last quarter. You're looking for 6 to 8% growth in the current quarter. So that's already a little bit of a deceleration. I mean, what does the rest of 2021 look like in terms of those sales growth numbers?
Yeah, I don't think anybody in the food business ever thought that they were going to sustain the high level of pandemic consumption. The real question strategically is, will there be an elevated baseline above where the business was pre-pandemic? And our view on that is it absolutely should be a yes to that question. So that means there will be, of course, a deceleration off of an unbelievable, kind of historic peak. But we do believe that baseline will continue. We haven't given guidance on the full year because this is a very dynamic situation. So what we've been doing for the last several quarters is trying to guide quarter to quarter. And so far, we've been pretty close to the pin with that approach.
Sean, you slipped one line into your last earnings call that I haven't heard from Conagra since the Pinnacle deal. Acquisitions. You seemed a lot more open to doing a deal moving forward or buying back stock. In terms of acquisitions, where would you want to go? Is there a place you see that you want to get into that you're not in right now, or are there areas of the business that you're looking to bulk up for battle over the next 1 year or two?
Sure. Well, our approach to capital allocation has always been balanced. In fact, last quarter, we raised our dividend 29%. And certainly buybacks are always on our radar, as now that we've delevered, potential bolt-on acquisitions. But it always depends upon what's the valuation. Does it fit strategically, and can we get it at a good value? And, if you think about our key growth priorities, they're pretty much frozen and snacking. Those are our two priority areas. Not that we wouldn't consider a bolt-on elsewhere, but that's usually where we look first to strengthen our business, because we believe we have tremendous runway in those two verticals.
All right, we'll leave it there. Conagra Brands President and CEO Sean Connolly, always good to see you. Stay safe, and we'll talk to you soon.
Thanks a lot. Take care.